Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to be talking about price action trading and focusing on best trading setups. We're going to do a short review of a case study pair and coming back to the basic understanding of focusing on best trade setups. In the playbook, we talk about the first green day, first red day, inside bar, 3-day breakout trades, 3-day setups, and then also 3 session setups. And a lot of traders are really stepping back now and taking a great look, bigger picture understanding of capitalizing on explosive movements rather than trying to trade movement back and forth and catch pips. They are focusing on scalable trade setups. So we're going to review some concepts and then look at a case study of the Swiss and have this video just short and digestible. And in a couple of coming videos, we'll address specific questions that have come up that will help to clarify and again finesse and help traders to really start to cultivate and grasp the maximum amount out of the playbook. Again, some traders have just really been able to hammer home some perfect opportunities. So coming back to understanding, number one, setups. There are only 3 things that markets do. We talk about this repeatedly, and I like to hammer that home because in the classical charting, Peter Brandt, Schabacker, Edwards, and McGee, going back to geometrical structure, bigger compression patterns that build up. A question one trader had is, what do you mean by order flow? Order flow is where, in my perception of order flow, is when the market is creating a range throughout the day to entice traders to take positions into the market as they build a box. Now, I repeat this over and over again. Price is always in a box. And it either breaks out and trends, it breaks out and pulls back and trends, or it breaks out, pulls back and reverses, or it breaks out or trades to the high or to the low and remains trading from high to low in a trading range. Now, the ideal setup will not have major red news on the calendar in any session that you are trading. And if there is major red news on the calendar, my go-to strategy is always the first bounce entry. So when there's timing, the timing dictates for me the session timing that I will put forth at the screen to maximize the best trade opportunity. So if I'm trading Asia, that is 8 to 11 p.m. If I'm trading the Europe-London window, that's 2 to 5 a.m. And if I'm trading the New York window, which is my main focus, it's 8 to 11 a.m., and that is New York time. Now, another excellent question from a trader regarding the trading view charts is that their daily delineating time is different. And for traders who have a different server time, then let me repeat this. To me, the day starts at 5 p.m. New York time, and it ends at 5 a.m. New York time. And gold indexes, oil will start at 6 a.m. They end at 5 p.m. They'll start at 6 a.m. Today's Martin Luther King Day, so no U.S. markets were trading. So if anybody was trading those markets today, they may have found that challenging. But obviously Asia and London were trading up until that U.S. session. But the timing is important because on a best trade setup, typically that movement will happen often. Sometimes in the first hour, but most often in the equity hour, the middle hour, especially for London at 3 a.m. New York time and at 9:30 a.m. New York time for the New York Market Equity Open. Now, something I haven't hammered over much in the playbook was major round numbers, double zeros and 50s. And just to clarify, some traders have asked, what do you mean by double zeros and 50s? That is the price on the right-hand side of the screen. Now, part of the reason I did not go over that in depth in the best trade setups playbook is that it took too much information for traders. It added another variable, and it's not critical. But as we will go over today, if you're using MT4, the Sweet Spots indicator is a free download that you can use for major round numbers. The criteria that we used in the playbook for entries is very, very specifically defined. And so the major round numbers were not critical to have in there. But today, as you'll see, it just adds clarification to reinforce the major round numbers, and that price is always in a 100 pip box. Then with our entry criteria, we have an entry to enter the market, engulfment pin hammer. We have our risk management. Is the trade a sizable trade? So is it a first red day, first green day opportunity from low of day or high of day for a potentially large move that is going to go very strongly in one direction that I will want to size into with my maximum position sizing that I allow for that type of setup? Or is it a session scalp where we're merely looking at a 25 to 50 pip move, high probability, high conviction, but we still want to manage our downside if this trade is slow moving or doesn't quite move with the strength that our sizable trade setup would. Risk management and then also stop loss. 1 bar stop, if we're buying at the low of the day, that's our maximum risk. Typically on currencies, it will be 15 pips. And on gold and oil, usually on a strong momentum price action movement, those trades should not come back. 20 pips should be the maximum that I will take as a loss on that trade. And then we want to preset our profit target because we want to take the majority of the position out, if not all of it out, and maximize the profitability on that trade setup. And we don't want to second guess that in the middle of the trade itself. So I like to be taken out as the market moves through my price. I pre-program that in because I am locking in that money. I may leave a small trailer on a smaller position or leave part of that. If the market had the potential to continue to move low week, high week, low week, that type of situation. But each trade will dictate that on a trade-by-trade basis based on the best setup that we have on the day. So we'll just take a Swiss franc as a typical case study, but this is a really great case study. If we just step back and look at this, we can look at a daily separator on any chart, and we can start drawing, lines and support and resistance, and say I'd sell here and buy there, and it's put names on it and call it a liquidity purge and all these different things. Or we can have a process that we can filter out instruments each session or each day that we go to the market and be looking for very specific setups, and then understanding the type of setup we have on the day for the session that we're trading, filtering out a basket of 6, 8, 10 instruments right down to 2 or 3 right away to be able to identify which instrument is offering me the best setup out of my playbook in the session that I'm trading today. So for me, I only mainly trade New York. I will look at Asia depending on if we've had a first red day, first green day type of opportunity, that type of situation. But typically I'm looking for the New York session opportunity. So we're looking at the Swiss franc. And what I want to have is a process that allows me to start each week knowing where I'm at in a weekly template, the daily template, the session template, and being able to identify a best trade setup. One of the things I use to do that is I talk about using the day count. And the day count is where I start on a Monday. So for a 3-day setup, I'm looking at Monday as the beginning of my week. But when I come to the screen on Monday, I want to know if I am already in the middle of a move when I come to the session that I am trading. Meaning that, am I in a second day of a 3-day move? Am I already, was Friday a first red day? Was it the high of the week? Was it an inside day? Was it day 3 breakouts? Whatever that may be. And then going back to our high of day, low of day, and our major round numbers, that allows me to form a thesis on the day in the session that I am trading. Now, just having a big picture look at the previous week on the Swiss franc. Our pink dividing lines are our Friday, Monday separator. I'm going to put Monday on here so everybody can see this. This is our Monday last week, and this is our Monday this week, our Martin Luther King Day. in the U.S. U.S. markets were closed today in honor of Martin Luther King. And so if we go back, we have a green box, and that delineates our 100 pip box. So this is 00 to 00 and 50 in the middle. And we come back to the beginning of the week, and we look. We have a market that broke out on Friday and collapsed in the U.S. session on Friday into Monday morning. We came below the 00s. We're in a new 100 pip box, and that market continued to fall lower through Friday's low of day. So we had our day one, as we've talked about, our false break reversal. Typically starts our day one count for our 3-day setup. Now that's our day one. We have our dump day. We continue to go lower on our Monday, which forms our opening range. That forms our opening range. And we talked about this in the playbook. The opening range will establish the initial high and low for the week. So we have our day one on Friday. Our new week starts. We come to the screen fresh. We have a market that continues to break down, and we have a low-hanging fruit trade in the New York session. Friday was also our first red day. So first red day is a day that closes below the open after making a pump up and then a high that collapses down and a low below the open. So our first day after a pump day that closes below the open. There's no first red day trade on Monday, but we have a low-hanging fruit trade, which is the trend continuation trade in our U.S. session. That's our opening range. We have a 100 pip box, and then the market proceeds to, in the U.S. session, go 25 pips below the 100 pip box before pulling back inside and trading sideways down at the bottom of our 100 pip box, which we've talked about being level 1 in the past. Level 1. So level 1 is where we buy, and if we're up at the top in level 3, between 75 and 100, that's where we're looking for sell opportunities potentially. Now, Monday, Tuesday form the initial balance. The initial balance is where we have, in 80% of the time, one of those extremes will typically tend to hold as the higher low of the week, meaning that once we have our high and low established and Monday, Tuesday have traded, there's our box. And that now gives us a thesis for day 1, day 2, day 3, low of the week or high of the week opportunities, our first red day, and depending on the type of template, in this particular case, we have a Monday, Tuesday that has formed from a Friday high. That was our day 1. We have a Monday that broke out and pulled back inside. And then we now have a 100 pip box in our timing window and a first green day. So coming back to hindsight and understanding the power of what yesterday was, because yesterday tells us what we're going to look for today on an instrument. And each instrument that we're following, we should be able to build a thesis in the session that we're trading based on hindsight. We have our opening range, which is Monday. Friday was our day 1. Monday's our day 2, and a broken down market. We have low-hanging fruit in the U.S. session. We did not get a high of the day, first red day trade setup in the U.S. or London session. We obviously had scalps in line with the existing trend, but we had a low-hanging fruit trend continuation. The market then proceeds to go into consolidation before giving a long trade at the low of the day on our day 2, which is our Tuesday, Monday, Tuesday, on the third day of a 3-day cycle. And the market breaks higher. That's our break in structure. Break in structure on the inside down low is what we have when we look for the dump and pump. We talk about this also in the playbook. Pump and dump or dump and pump. This ends up being an inside day. And now several traders have asked me, how could it be a first green day if it's an inside day? Or how could it be a first red day if it's an inside day? That has nothing to do with it. An inside day can become a first green day or a first red day. The inside bar trade is a completely different trade setup. But recognizing the inside day or narrow range day that becomes a first green day or first red day after a break in structure is a powerful signal for the dump and pump in the new day after the first green day, it is a low of the day buy opportunity in the session that we are trading. Now, one of the things I go over specifically in the videos is to define your consolidation into the close after you have a first green day or first red day setup. What that does now is it keeps you out of trading in the chop and establishes your high-low boundaries for a low of the day 3-session buy setup or a high of the day 3-session sell setup for a first red day short trade. Now we have our Monday, Tuesday initial balance, day 1, day 2, day 3, 3-day cycle, and then our low of the day buy opportunity engulfment in the London Open. And in our smaller criteria, we use the 5-minute time frame to enter this market to have a tight risk management and an asymmetrical risk-reward profit target. Now, I've talked about you can use the high-low of the range as a potential profit target. We have our high-low of the week, or we can just use major round numbers. We are in a 25 to 50 pip box. This market should yield a minimum of 50 to 75 pips of profit target. This is our first green day trade coming out of level 1 after a false break reversal of our 100 pip box, 25 pips outside of the range, a break in structure, consolidation, buy low engulfment opportunity on day 3 in the London session. This market then continues to trade higher. Not really a great low-hanging fruit continuation trend trade, but nonetheless still a dump and pump continuation trade back through the high of the week. We're up high. This is not what I would consider to be a best trade continuation setup in the U.S. session in this particular pair, but perfect first green day trade for the London window. A 25 plus pip scalp in the U.S. session at the high of the day, which you'll notice again, defining our consolidation for a 3-session setup scalp. So U.S., Asia's inside. On the day it forms our high and our low in London. 3-session London high, U.S. low, inside. Back up to the high of London for a session trade. Back down into the breakout traders from the London window. So we have our day 1, day 2, day 3, first green day buy trade. This is a sizable opportunity for traders in the London session. The market then breaks out 25 and continues higher 50 pips outside of our range. We have major red news on the calendar. That market exploded vertically back through our low of the day. After major red news, we go to the first bounce trade opportunity. If there is no first bounce, if it's 8:30 a.m. New York time, major red news, my next criteria is the New York equity market open, 9:30 a.m. New York. After high volatility, we redraw our highs and lows. The news candle breaks structure on the inside. Breaks structure on the inside up high. This is a 5-minute chart. In our 100 pip box, break in structure on the inside. New York market open is our pin hammer right here at 9:30 New York time for the pump up into the high of the day. We get our reversal, and on our entry criteria from the Best Trade Setups playbook, we have a short trade for a 25 to 50 pip short back into our low of the session after a false break reversal at the high of the week. So we have a New York Open session trade back down after our failed breakout and news candle collapse. But this day now closes on Thursday as a first red day. First red day is we have a pump up day first. I want traders to go back and study the playbook because you're sending me screenshots of markets that have a down day or an up day and you're calling that the first red day setup. Remember, pump up day and then a first red day. Dump day, then a first green day. Now notice what's happened here, what the pump up does. The pump up brings price action up high. It brings it up high, and they go into consolidation. If that market fails up top, we now have volume trapped up high, and as some traders have said, well, it's manufactured volume. Well, let's just say on longer time frames, we have other time frame traders trapped on the breakouts. It also has longer time frame indicators convincing traders that the trend is in the opposite direction, still going up. Now, first red day setup is a high of the day sell opportunity. That's the high of our day heading into the U.S. session. Now, I've talked about ideal first red day, first green day will often be 3 session setups. So when we had our first green day long trade, we had U.S., Asia, London. First red day, we have U.S., Asia's inside, puts in a high, London's inside, puts in a low. We have a high of the day at the end of the Asian session, a new high of the day at the end of the Asian session. Initially, our consolidation is our U.S. session high-low. They go lower-low in Asia, put in a lower high. Everything else is inside. First red day is a high of the day sell opportunity. They pump it up into the high of the day after a lower low, giving us a break in structure on the inside. Break in structure on the inside is the pump and dump setup. They pump it up and give the short trade into our U.S. Open, New York Open, for the 25 plus pip short trade after our first red day setup. So in our smaller time frame, our 5-minute chart, you'll notice again our major round numbers. We've already gone 50 pips above our range. So going back to our 50-minute, we went 50 pips above the 00 box. And if you're using TradingView, you can there is a number indicator. I'm sorry, I don't know what that is. I know traders have messaged me. I'll try to provide that in the link. But we have our short trade collapse. Now I want to emphasize again the importance of coming to the screen with set times and best trade setups for the session. This trade collapses. That's easy money. That's easy money. I can size into this. But the market pulls back and goes into consolidation after our first red day trade. Now remember what I said about first green day in the best trade setups playbook. If you don't get a full follow through, look for the second day after the trade for the vertical parabolic setup. This is the parabolic setup into the Asian session. We draw our consolidation. The consolidation is just the most recent peak formation, high and low, in that New York window. They make a lower high. I'm going to redraw this. They make a lower high, but before the close, they make lower highs. We're inside of a 25 pip box in consolidation at the beginning of the new day on the Monday. They pump it up, pump it up, pump it up right into the open of the Asian session for an easy 25 pip collapse, continuation low-hanging fruit after our first red day trade setup on the Friday. So I have traders looking for low-hanging fruit at the low of the week or at the high of the week. After you've broken the low or high of the week, I am not looking to trade into the low or the high. Understand that. So we come back and look at the big picture. Where are we? We're inside of a 100 pip box after a failed breakout. They pump it back up into the failed breakout for the first red day, high of the week, low of the session, low of the day trade, and the continuation low-hanging fruit in the Asian session. So go and study your playbook, mark up your charts. Don't try to curve fit an instrument to your setup. Look for the instrument that has the best trading setups. Keep it simple, traders. Today, again, for me, Martin Luther King Day, no trading in the U.S. session. Some traders took advantage of the Asian and London movements that happened pretty much on all markets. There was some excellent trade opportunities. We're going to have some explosive moves. Remember what I've said about holidays in the U.S. session. If we have a narrow range day on a market or we have a failed breakout, we can potentially have a large trading setup brewing coming into the Tuesday, Wednesday after a U.S. holiday weekend. Have a great week, traders. Start it off. Thank you again for your patience. I have a huge amount of emails I'm working through. I appreciate everybody's questions and comments. I will answer every single one of those. Try to cover them in the videos also. Again, thank you for your patience. Have a great week, traders. The best is yet to come. Keep it going, keep it growing, and may the markets go with you.